Hey everybody, Economic Ninja here. I hope you're doing well. Today we're going to be talking about markets. We're going to be talking about the dollar spiking in value. We're going to talk about gold and silver going down, but we're going to talk about a historical ratio that you have all heard, but I guarantee you, you haven't heard it this way. I am joined today with Patrick Karim from NorthstarBadCharts.com. He is on Twitter as @BadCharts1. Patrick, how you doing?
Man, I'm doing great. It's just awesome there to be on your show there. I went to check a few of your YouTube videos right before I went. And I said, holy Moses, what did I get myself into, man? This is going to be awesome.
Yeah. You know what? We were talking about this, about the channel and our belief system and all that kind of stuff, a few minutes before this and getting all fired up. And Patrick goes, "You're really scaring the piss out of me, man." And I go, "There's nothing to be scared about when you know the truth." And that's when we started really getting fired up. So Patrick, we're gonna talk about the gold and silver ratio today, right? Because it's really a hot topic with the Dixie being up. What can we go? Where do we want to start?
Well, the gold silver ratio, guys, a lot of people, they look at it just to see, okay, when should I swap my gold versus my silver? Like any ratios you want to know what's cheap versus another asset. And usually ratio just oscillates. But the gold silver ratio, guys, it's a lot more than that. It's like a financial liquidity detector. It could smell metals. There's certain ratios between the metals that tell you something. So let's say the gold silver ratio spikes up. That means silver is getting sold off pretty strong. It's like risk off. Something's bad. Gold might be going down, but it's not going to go down as fast as silver. Yeah. And from all the charts I've done, when GFC crisis or the March Madness, when the gold silver ratio not just trending upwards, when it really crescendo spikes upwards, you got the VIX that spikes upwards, you got a DXY that spikes upwards. So like huge liquidity event, everybody's selling everything, everybody's going to US dollars. And that's when like you hold your breath and you think it's the end of the world. But I kind of embrace those moments because out of the spike, when everybody's running and they think silver's going down to $2, that's actually the opportunity, the contrarian opportunity, which is the hardest thing to pull the trigger when you're an unprepared investor and your heart's beating and you see your portfolio dropping. But that's actually the greatest opportunity of your life. If you understand that these spikes, after that, when they unwind, that's when you have the greatest gains in everything practically. Even the US equities, they go up when that VIX and that GSR goes down. It's just that silver and gold will outperform in that first leg. When that unwinds, when the market's really like has to start pricing in some issues, unwinding of that, and you'll see that you'll be super happy to own silver there when that happens.
So well said. So we're seeing something literally today, and this video is going to go out tomorrow, sorry, on Saturday, but today we're seeing the Dixie is still just off down a little bit, but it's still we're at like a 1.5-year high right now. Gold is barely down, whereas silver's down like 2.5% as we're recording this. So you were talking about something you're watching right now that you believe if we close over a certain area, we may see quite a downturn in the markets next week, right?
Well, yeah, so I could show you some charts there, and usually like a chart says like it's worth 1,000. An image is worth 1,000 words. Is that the expression?
Something like that. Well, as you're pulling that up too, I want to also plug in your YouTube channel, guys. You know the Economic Ninja loves to share and other YouTube channels that could use support, but that can bring you a lot of information. Patrick, what's the name of your YouTube channel?
Okay, so guys, you could go, there's two of them. There's youtube.com/badcharts or youtube.com/NorthstarBadCharts. And the one with North Star Bad Charts is we have North Star Charts. My good friend, Kevin Wadsworth, that's all doing, also doing charts there and the charting tips. And like, there's a whole bunch of good content over there. So go subscribe, guys, to North Star Bad Charts on the YouTube there.
And what I'll do as you're getting ready, Kevin or Patrick, sorry. I want you to send me a link of something you want me to share. I'll pin it in the comment section. So then they know how to get right there. All right. What are we looking at?
All right. What I'm going to get is my market crash indicator, guys. It's not a bear market indicator. It's a market crash indicator. So a liquidity event, something really violent that's going to happen. And I'll just pop it up right here. Okay. So this is a great feature of TradingView, guys. So whenever you do a chart, this chart was done November 26th. It etches in stone the annotations that I did. And then after that, there's a little play button that's going to fast forward. So right here, guys, this is March Madness, which I like to call the DXY spikes up. The VIX spikes up, crescendos up. Gold silver ratio, you see a nice base, spikes up. And this is a percentage of stocks for the NASDAQ below their 200-day moving average.
Wow.
And it's violent, the sell-off when this thing happens. And right here, I kind of drew the same. I said, okay, this is the DXY. It's already crescendoing up. The VIX, it's hanging at high levels. The gold silver ratio, same setup here. So I'm starting to get scared. I want to see this wind down. If it doesn't wind down, we're at a severe risk. And when I did this, NASDAQ, the percentage of stocks, you see, it was just breaking down and backtesting. So I'm going to fast forward this so you guys get to see what happened. And look at that. Super, super scary stuff. Sorry, I don't want like the DXY kind of went up, and down, and it's breaking out again to the upside. So this could really accelerate upwards. The VIX, it's not going down, guys. So this is super scary. It's like higher lows, and then just you're squeezing the soap bar, and it just flies out. So like things get out of control really, really fast when this setup's there. The gold silver ratio, again, it's refusing to go down. The metals, look, silver going down today or yesterday versus gold. It's not a knock on silver manipulators doing something at this moment.
Yeah.
The markets, they're using the metals as a financial instrument. At that stage, it's just purely financial. It has nothing to do, like, let's say if we all go on silver, but as a financial instrument, they're telling you it's a risk-off event that's probably going to happen. And we're right here. I could have stretched that line maybe, and this is probably just a back test. And look at that. The NASDAQ
it's already
stocks,
moving down. Yes, I love what you say is that it's not a knock on silver. It's just that the gold and silver ratio could explode to the high side for gold because institutions and large investors are diving into gold. So it'll show strength. And literally today we're seeing that on a down day for both metals, gold is fractionally down. I don't even know if it's like down 0.25%, whereas silver is down 2.5%. So now, Patrick, talk about the opportunities here. What are we seeing if this does happen soon? Because investors are starting to get scared that 25 basis points or 50 basis points that the Fed is threatening to do, if it goes through, we could see some serious volatility here, right?
Look, for me, if like from all the like my big picture ratio charts I'm seeing is we're heading in the transition. So this inflation stuff there, it's not transitory. I have some big picture charts there. I'll just that are showing that we're actually. I have to show you this, man.
Yeah.
I'll pop it up right here. You guys, you got to take a step back. You have to PPI, and this is another trick, guys, for all the folks that say that the CPI is bamboozled. Mm-hmm. Just look at the producer price index, guys. So I'll show you the all-time chart. This is a producer price index since the 1914. Got a really lot of data here. And the producer price index is the input costs of the farmer, his electricity bill, his gas bill. So there's no hedonics on this. This is the actual guy telling you, look, this is my cost to run my business. So eventually this leaks into the CPI, even if they want to manufacture the CPI or adjust it. This breaking out is eventual inflation because they could absorb on their margins a certain amount of time their input costs. But if this is sustained, then they won't be able to this is going to leak into the CPI. Look at the bottom here. This is super critical. This is a 7-year rate of change down here, Travis.
Yes.
And this is the momentum. So this is important. These signals, they don't come in often. And when they do, that means when you're breaking out, the 7-year rate of change is passing from below negative to above. You have a powerful uptrend that happens. Look at that. The 1960s. What happened in 1960s? What happened even in 2000? In 2000, it was nothing. The gold rally we had in silver in 2000, it was small potatoes.
Yeah. Let's talk about that spike in 08 real quick. That first little spike where you're looking at your resistance line up above. That tiny, let's put your cursor on it so I can show you what I'm talking about. Above, go to the top chart. Yeah, perfect. Okay, so that's a really important one because in 2006 and a half, I was liquidating all my real estate. I saw that bubble coming as they were raising rates. People weren't going to be able to pay for it. And that fuel increase that happened in 2008 was very special because in June and July, the national average of fuel was increasing. Well, that caused a lot of issues with supply chain and costs and things. And that's when people finally figured it out. Back this last July, I said, don't worry about the lumber price. It's going to start collapsing because people are going to care more about the food costs and the fuel costs. And we're starting to see that. And like you said, things can exponentially move to the upside really out of panic because these farmers and the producers, they need to start raising rates ahead of time to be able to at least hold on to their margins. So what do you think could happen if how long do you believe, in your opinion, and this isn't professional advice, I get that, would this have to stay above that trend line to really see some pain in the markets?
Well, they're already starting. The Russell sucks, man. You see the Russell? I
don't want to talk about the Russell. I've been waiting to short the Russell and I missed it. I was literally going to go into not SPY, but oh, I'm totally blank. FAS. I was going to go into that leveraged FAS and pick up a long call out of the money call options, and I totally missed it for the second time. And it sucks right now.
Well, I always look at the weakest dog in the horse. So the SPX, it always looks ultra powerful because of the top 5. I don't know, like, but if you want to see weakness in US equities versus commodities, or look at the Russell, because if the Russell's not failing versus gold, then forget capital flows going into commodities. But it starts with the Russell failing versus gold, and the Russell has been failing. So,
well, and it's failing because it's small businesses, right? It's small business America in the Russell.
Yeah, and when there's trouble, the money is going to leave the small cap and is going to start going to blue chips, right?
Yeah.
So it's probably going to be the first one that's going to start failing.
Yep.
But if I put that ratio chart of the Russell versus silver, look at that. Even the silver chart, remove log.
Yeah.
So look, this is 2000. You see the Russell outperforming silver. That was the peak of the bubble. And now the peak, we've had it. This is US equities, for me, the bubble's burst since 2018 at the Powell pivot or whenever. That's when it started.
Yeah, check this out. So we were talking before the interview about when I sold my house, because I sold my house in July of 2018, bought Bitcoin and silver with it, because I said, this is the top. We're going to start losing it right now. And I was getting ready for a banking collapse. And a lot of people don't understand what happened in September of 19 when the interbank lending rate spiked to 12%, because banks didn't even trust each other to loan them money. We were in a crisis back then. And that line and that date lines up almost perfectly with when I sold my house.
It's a paradigm shift. And so now it's just a question of time and letting the momentum, lower highs, the heaviness of the capital flow. So, and look, it broke down. This is a critical breakdown line. We're not coming, it's over.
Yeah.
Look, I'm a chart trader. So if this goes back above, I have to revise my theory. Something's happening. But right now, for me, we're in this transition area, 2002, 3, 4.
Yep.
And once look,
you're bumping support right now and you're not able to get past support. I mean, resistance. I apologize. Resistance. Yeah.
Yeah. And look, this is a rising wedge. So a rising wedge, when it breaks down, the target is the bottom here. The momentum.
Look at that. Look at how it broke right there too.
Yeah. Look, for me, the target is like a huge rush into precious metals, silver versus US equities for the next couple of years there until we reach here. And then it's really going to accelerate when we go into power zone, when we have negative rate of change. So right now, this is going to be the power zone. And if you look on the daily chart, stop it, guys. You're not going to see a big picture. These macro tidal flows, look, we're not even in negative zone for the rate of change for that ratio. That means that the momentum it's just starting. It's just building up. And once we go below zero, that's when you're going to make huge gains until this thing. And eventually, guys, we will have to, until this breaks out back to upside. Guys, you got to be in commodities at this stage, or at least start preparing for this, because the US equities, unless this turns back up like crazy, they're done, guys.
Yeah, let's do this. Let's go back to full screen so that we could talk about this, because let's talk about opportunities. Because when you were before in the interview, you're like, man, you're really scaring the piss out of me. And I go, it's good to know the truth, right? So I'm moving. I was telling everybody, Ninja Nation, that I am in a cash accumulation phase back in October, and I'm still there. I'm not buying anything extra. However, this week I've officially started to move cash into different brokerage accounts. What kind of opportunities do you see from this situation if in this next week we start to see this breakdown further?
Well, it depends, where you guys definitely you need to have some capital to be able to enjoy that. If you're fully levered up, you won't be able to get those cheap miners or get buy silver on the cheap to have that. If you're positioned, and for you know that you've already positioned because you saw that ratio chart, and you might be early by a year or two, and you're already fully positioned, then you probably want to write that out until 2027, 2028, whenever that ratio goes back up.
Yeah.
US equities, super skittish. It's like, let's say I'm on the, this is how I try to rationalize this to people. Let's say you're on the sidelines and you see this and you see this ratio chart. Why the hell would you buy US equities? The risk to reward, even if it goes up, the Russell from here, or the risk to reward profile is not in favor of US equities anymore. It's just not. When that ratio was down and the commodities were severely outperforming US equities, and that momentum indicator was turning up, fine. That the risk to reward profile, okay, go in US equities. Whatever's happening, macro behind is going to help you make more money in US equities and commodities. But now, it's even if there's a melt up, it's weakness. People can't see it. Even if the US equities go up, they're not going up as fast as they used to before. And it's like you're running uphill, and eventually you're running out of grass. You can't go up the hill as fast, and just roll over like a dog, like rolls down the hill dead. And that's what's a slow death happening right now.
So, and I want to make sure everyone knows, when he's talking about US equities too, we got to separate standard equities and mining stocks, right? Because I've been talking to my channel about how important it is to not just dive into mining stocks right now, because in the first phase of a liquidation, when the stock market starts to fall, everything's sold, right? Because especially the high margin rates we have right now, historical margin levels, very similar to right before the Great Depression. Now, actually, it's worse, to be honest with you, but they had high margin there too. So everything gets sold out. But like in 2008, as Lehman collapsed, about 8 weeks later, gold and silver found a bottom. And as gold and silver started a multi-year bull run, the equities associated with gold and silver saw hundreds of % increase. And that's what I'm positioning myself for. So I'm not diving in right now, because I do believe, like Patrick's saying, that we might see some more blood in the streets all across the board. Even though gold and silver hold its pressure, its amount, stop looking at dollar terms like, oh, gold's, still the same price it was 6 months ago. If it's the same price and everything else is going down, it actually has strength. Okay. So that's something I want to say. And then the other thing is I'm really big on these cycles. People don't understand how big these cycles are. And I'm glad you brought up, don't look at the daily chart. Look at these longer trends, the macro. Pull back, get a 10,000 foot view of what's going on. So thank you for bringing that up. I really like that.
It's the only way you could survive emotionally. Like, it doesn't make sense staring at your screen. What are you guys doing, man?
Yeah. And
take a step back.
Well, in a day where we have Robinhood and Webull and all these companies that are literally preying on people, like, here, we're going to acquisition cost for our customer is giving them something. And then literally on the days everything's crashing, saying, oh, you can't buy, you can only sell. Or, like literally, it's like they're literally producing crashes. It blows my mind. So to say that this is like the run up to the Great Depression, it's actually worse, wouldn't you say?
Well, I saw some charts like this is, I did the analogy of etymology of market breakdowns. The 1929 top, the 2001 .com bubble, and this one, the structures. I have charts on Twitter. I could give you the links for your viewers. They look the same. It's the same type, up, down. We're gonna see the echo bubble, how high it goes, and after that, there's gonna be a wedge pattern, and if that breaks down, game over. 80% drawdown. And
we're going to use code words. In 1918, there was a Spanish cough, and that led to the Depression of 1920. And very few people understand what the Depression of 1920 was. And then running up to a almost decade of money printing and credit availability going into the Great Depression, I believe, quite frankly, we're in reverse. We saw that in Lehman's time. We saw the money printing, and ironically, we had the 2019 cough. So it's going to get crazy. So let's do this. I want to end this I don't want to keep it long, Patrick, but I'm going to put some links from your channel in the description below and in the comment section, guys. And then I want to see the comments. What do you guys want to hear about from him? So because we can probably do some more videos, because especially next week, I am keenly watching. Are you sitting on the side with cash getting ready to pounce?
Yeah. I always have, and everybody should have some cash on the side, guys, because if all your cash is invested emotionally, if there's a drawdown, you're dead man walking. You need to trust me, guys. If you have 10-20% of your net asset value in cash, it's, even if there's inflation, trust me, you'll sleep better knowing that it'll be easier to hold your miners that have 30% drawdown. So always have some cash, guys, on hand there. I'm not a financial advisor. But from experience, I know everybody wants to get rich fast and option calls, and they got every penny there. But guys, if there's a drawdown, your emotional capital is going to kill you before your net asset value drops.
Yeah. And to say that I'm a financial advisor, come on, guys, I'm just a dude with a Brohawk, a dream, and a McDonald's coffee. All right. Well, what's that?
So credible.
It's so incredible. Why am I watching this dude? All right. Well, that being said, Patrick, thank you so much for coming on. Guys, we're going to put the links below. The Economic Ninja is out.